Before the war with Iran broke out, the U.S. economy was actually on pretty stable footing. We saw manufacturing finally exit recession. When was the last time I had a quarterly and was able to say that? We saw the service sector accelerating. We saw consumers spending money on not just necessity items. And we also saw housing getting a boost. We had a pretty big drop in mortgage rates, and we saw housing activity resume. But with the war now that's been going on longer than the White House anticipated, we think that it does bring a very uncertain environment, specifically here in the near term. Now, I want to be clear, we do not think this is going to be a long, dragged out conflict between the U.S. and Iran. Instead, we do think that economic growth will end up positive for this year. But in the near term, there's a lot of uncertainty, specifically around the consumer and inflation. So let's talk about the consumer. And when you look at this chart, this is gasoline prices. We're looking at gasoline prices up $1.30 since this conflict broke out. And there's a general rule of thumb for every 1 cent increase in gasoline prices, it reduces consumer spending power by $1 billion for the year because they have to divert money instead of spending on things like goods and services to spending it on energy. So a $1.30 increase, that equates to $130 billion less annual spending power for the consumer. And we came into this year with a lot of optimism around the One Big Beautiful tax bill and the tax refund increase. Well, the Tax Foundation says it should be about $100 billion more dollars this year than last year. So you can pretty much say that because of the rise in energy costs, we are wiping that away. So there's likely going to be pressure on the consumer in the near term. From a business standpoint, we're starting to see supply chain disruptions emerge, and that's concerning until we get the Strait of Hormuz operating at normally again. Now, there's bottlenecks that have to be cleared up, so this isn't going to just turn a switch and come back overnight, but we are seeing it start to show up in some of the economic data. And when you look at this chart, this is showing you delivery times for manufacturers. This is how long they're waiting for the components to put into the products they're making. And we're looking at these levels up at the highest since we've seen since 2022. And you remember that was the aftermath of the pandemic when we had those supply chain disruptions. So in the near term, we think that the combination of these two can add to inflation pressures, put further strain on the consumer, and we should see a slowdown here in this first quarter and in the second quarter. But we do think that this will be cleared up in the second half of this year, and we will be able to produce relatively solid economic growth for the year.